Hi there, I'm using Verbalate AI video translation and lip sync software. It's pretty amazing. Watch this.
I can translate my videos into other languages. For example, I am now speaking Hindi.
नमस्ते। मैं पहली बार हिंदी में बोल रहा हूं, लेकिन वर्बलेट इसे इतना आसान बना देता है।
Or how about Spanish?
Hola, vaya, increíble.
También puedo hablar español.
Sign up at verbalate.ai today to gain early access to trial the product for creators and strategic partners, and gain the ability to translate and lip sync videos in all major languages. You can view the info in the description below. Now, onto the video. Hi, it's Lee, and welcome to the Tesla Economist. I can't see Tesla's financials improving much anytime soon. There isn't much coming, unless Tesla can suddenly raise their prices by about 5 or 10% due to rates dropping and the economy recovering and demand rising. Equally, if they manage to cut costs by 10%, then otherwise there isn't much else on the way anytime soon. But Tesla is continually growing and expanding. Of course there'll be more profits, you might think. Well, let's face it, we're not exactly seeing the promised 50% increase in production or deliveries. Yes, this year we might hit 1.8 million production, which is still a 33% increase from last year. And if we hit that, then there's still a remaining capacity of around 600,000 from Berlin and Texas. If they ramp to full capacity, and another 20,000 a year from Cybertruck when it hits volume production supposedly next year, if things go well, Tesla could reach those run rates. But that wouldn't be until the end of 2024. The actual increase over next year might be closer to just an extra 300,000 to 400,000 units, or around a 20% increase in production from 1.8 million. That's right, Tesla will probably do about 2.2 million units next year. And that's if things go relatively well. Although it doesn't require a 4680 breakthrough, or at least not a Tesla 4680 breakthrough, namely dry battery electrodes. This increase in production is not reliant on that, because we have Panasonic coming to save the day about midway through 2024 with their 4680 cells. Then presumably, as long as there is the cell supply, then these factories can actually ramp up, at least the Model Ys. Who knows what manufacturing bottlenecks we might still see with the Cybertruck. In other words, next year we'll not see any major increase in profits either. These additional units from the Model Y may have to lower prices in order to gain the extra demand, or require more expense on advertising. There should be some increase in profits, but marginal, and I would guess any increase in profits from them will be taken down by the Cybertruck. As soon as that line goes into production, the cost of it goes from capex to cost of goods sold. And it won't be cheap. However, I think the price of the Cybertruck will initially be high, probably around $100,000. So that line may start to break even when they're at perhaps a run rate of around 50,000 a year. But there are a lot of depends on in that figure. So that takes us to the end of 2024, with no significant profit increase. But also, at around that time, we should hopefully be seeing vehicles come out of the Mexico factory too. Except that will also likely add further to expense until that is ramped up. And with such low-cost products, we may need to see 300,000 to 400,000 units a year run rate until we're at positive gross margin from that factory. I don't think we'll see Mexico contribute to profits noticeably until sometime in 2025. A lot of investors do have hope for energy storage, but that might not be quite as much as they expect. Even if profits reach as much as $1 billion a quarter, which seems a stretch, that's still less than 1% of the valuation of the company when annualized. It's not going to send the stock price to the moon. The Shanghai Megapack factory might be complete in about a year, and possibly ramped within another year, so can't really contribute much in the meantime. Lathrop, we are still waiting to see how long it will take to ramp. I think it's mainly cell supply, and CATL do have their latest factory ready, so we might see an influx of LFP cells coming soon. Either way, when Lathrop is ramped, it'll be about $5 billion gross profit when doing 40 gigawatt hours a year. This is not the make or break for Tesla. It will help, and actually will be a reasonable contribution relative to current earnings, but not relative to the company valuation. Even if FSD is officially solved tomorrow, depending on what that actually means, then that won't make profits skyrocket the following quarter either. There may be a one-off deferred revenue payment. From there, we still need regulatory approval. However, that might be easier than many think. And if it does come through, then more people will likely order FSD or subscription service. However, even if there are 2 million new subscribers paying even $300 a month, then that's only $7.2 billion a year. Yes, it's good, but not huge enough. It will take robotaxis to get to the crazy numbers. I mean, don't get me wrong, these are still massive amounts of income, but only relative to what Tesla are currently producing, due to the fact that Tesla's margins have been so compressed lately, due to price drops, due to the economy, and due to interest rates. I mean, if it all does go well, we're still talking about around $20 billion a year net profit by the end of next year. But remember, we saw the equivalent of an annual net profit as $20 billion in Q3 2022 as well, which doesn't scream growth. And that was before the subsidies and tax credits. But that's the thing. Tesla is a growth company still. But not all growth is measured in profits. A lot of it has to do with at what rate Tesla are increasing production. However, not just that, but at what rate Tesla are capable of increasing production too. We saw the Texas and Berlin factories, which is not a good example of Tesla's rate increases. Now all eyes will be on Mexico. If Tesla can build that factory in less than a year and have a run rate of 1 million a year later and up to 2 million another year after that, then Tesla have reset the rate at which production can grow, i.e. they can increase production by 2 million units a year after 1 year of building and 2 years of ramping. This is the rate that matters when it comes to EV growth. It's about what Tesla are capable of now, not how long things took in the past, especially this early on in the game. This would be based on the assumption that these vehicles are also being built at lower cost with high margins, as we have also seen what rate Tesla can grow production with the older techniques for Model Y in Shanghai. However, that's not going to be profitable enough moving forward these days. If EVs are the future, Tesla need to get costs down significantly, and Elon claims they found the way. So not just about Tesla's rate of production, but the cost Tesla are capable of getting to when producing EVs. So Tesla's growth is not just about Tesla's rate of production, but also the cost Tesla are capable of getting down to when producing EVs. I've been saying the future of EVs becoming the establishment and overtaking ICE will ultimately come down to cost. It doesn't matter if there's a movement or climate change or the fact the product is superior. It's all moot if consumers can't afford the product. Tesla showing they can produce an EV for under $20,000 is the answer. Then Tesla showing they can build a factory and have 2 million a year run rate within 3 years of breaking ground is the other indicator. Supply and demand. Demand being a low-cost EV, supply being a massive run rate from the factory. That's it. From there, it's rinse and repeat. Of course, Tesla need to make sure these cars are being produced with materials that are abundant enough to be scaled so high. Well, there's plenty of iron for the LFP batteries. There's plenty of lithium in the world. These cars are using about a quarter as much copper with the wiring at 48 volts. It sounds like the limiting factor is the rate at which lithium can be processed. Tesla's growth in the stock price is not going to come from the profits, although it very much appeared that way when it felt like demand was infinite, margins were sky high, and 4680 cells would change the world. Tesla's growth will be in more advanced manufacturing, further improvements in FSD, and seeing robots perform more tasks that can replace humans at faster rates. The profits don't need to get there anytime soon, at least not for the next few years, as the foundation is laid. These are seeds that will be ready at a moment's notice to sprout once various breakthroughs have been achieved. But we are growth investors, not value investors. We aren't looking for dividends. We can see past that and look into the future. If we can see that Tesla are able to make EVs for under $20,000 with new manufacturing techniques that also increase the production speed to volume production like never before seen, then we might think that it's just a matter of time from there until Tesla make more factories with more models in more markets. And as the costs will be so low, then they'll be profitable and have high demand. Meanwhile, the EV infrastructure and technology is still building out, with more chargers around the globe and faster charging speeds to make a frictionless experience when owning an EV. So what I am saying is we don't need to measure Tesla's growth on current financials, but rather the technology and capabilities of what Tesla can achieve with future financials. It's possible the previous financials just got ahead of itself due to crazy events in the world. I think after all this, in the next video, we should do some financials and see what we might have with a recovered economy, lower rates, Mexico running, and Texas and Berlin, probably sometime around the end of 2025. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.